With world-class expertise and local insight, Dexus creates value not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello and welcome to the COB this Tuesday. I'm Juliette Sarli. Let's have a look at where the local market is finishing. Hasn't really gone much or anywhere today, I should say. A bit of a seesaw zigzag session, if you will. Of course, we've been following very closely about what's happening at the so-called Macquarie Confession Season, the annual conference. Also quite a little bit of negative sentiment coming through on the banks today. And of course, the S&P 500 had a fall, snapping that really long winning streak. The dollar selling taking somewhat of a breather today. Let's have a look at some of the thematics of the day as we get into wrapping up the overall session for you. And of course, as we mentioned, the ASX zigzagging. Confession season at Macquarie being really interesting. We heard from the likes of Wesfarmers CEO Rob Scott. We heard from Westpac. We heard from WiseTech talking about the implication of tariffs. And we'll get into that with our guest Martin Crabb from Shaw and Partners coming up. While also there was a dwelling drive when we looked at the building approvals data, down 8.8% in March. That's not what you want to see when we're trying to, of course, encourage the building of homes and apartments. That was weaker than what the market was looking for, and of course, not only in housing but also units. I think a fall of nearly 15% in that building approval data. Household spending also having somewhat of a snap in March, in fact breaking that 5-month winning streak. AMP saying today's data makes it more likely for the RBA to continue its cutting cycle in May and potentially adding to the argument for more rate cuts later this year, and Oxford Economics expecting another 3 rate cuts in 2025. Looking at the banks, particularly as we heard from Westpac, continuing to be sold off today. Brokers cutting their price target on Westpac too, shares down by 2.3%. Looking at the REITs as well, a little bit of positivity there. Goodman Group, I noted Kai Chen on the call yesterday saying that is his pick. Arena REIT is another stock that analysts say could do well under the, of course, majority Labor government. And we're also seeing consumer discretionary stocks in focus. Wesfarmers Rob Scott saying that, look, the trade war, of course, we don't like to see it, but it could actually put some deflationary pressure on prices, on, of course, the import of some of the goods that we get from China, and that could lead to lower prices. He did also very much indicate that cost of living pressures are seeing consumers cut back or search for bargains. Having a look at more on that, Rob Scott saying the US-China trade war could lead to lower prices for Aussie consumers. Seven West Media, meanwhile, set to acquire the TV assets of Southern Cross Media Group. HMC Capital came under pressure, down about 7%. It trimmed its full-year earnings per share outlook. Sigma Healthcare also in focus. It did see its pre-tax earnings rise 36% though over the first 9 months of the year. Of course, talking about the cost implication of the Chemist Warehouse merger as well. And Viva Energy affirming its first quarter trading performance aligned with guidance, bolstered by some stronger retail fuel margins. Tabcorp up 10%. Jefferies lauding its strategy refresh. Magellan Financial also higher on assets under management growth. And Platinum Asset was down by 8% after it reported lower monthly funds under management. Let's get now to our guest of the day, Martin Crabb from Shaw and Partners. Good to have you with us.
Good to be here, Juliette.
Just starting with the so-called confession season, what sort of do you think are some of the main takeaways that we're hearing and the implications of the tariffs and, of course, the slowdown in consumer spending?
Yeah, I think the obvious thing is that if you're a company and you are providing guidance, how the heck do you do that in the current environment? No one knows what the future holds, probably not even the President of the United States. So, if you've got guidance in the market, you've got to be really, really sure you can maintain it. Otherwise, you're just better off saying, look, we're suspending it. It doesn't mean we're not aiming for the same numbers. It's just our conviction around reaching them. So the people that are more exposed to trade, such as WiseTech, unsurprisingly, have said, look, container volumes are probably going to be off. And they're just quoting Drury, who do the global data. So it's not like they're seeing it in their business. They're just saying that, look, it looks like global trade volumes will be impacted, and that's probably going to hit us a little bit. The other ones obviously are the ones that at the pointier end of the scale. So, whether that's companies in the US, or we saw, I think it was it's just slipped my mind. Yeah, Reliance Worldwide.
Yes.
They weren't at the conference, but they downgraded their earnings quite dramatically the other day. So we're just starting to join the dots, Juliet, and starting to see those businesses that are exposed to trade or exposed to US consumer or US slowdown. Block was the other one I was thinking of as well that had a big downgrade the other day. So I think the companies, there's probably 8 companies that were downgraded today or came out with statements that the market didn't like, and probably about 4 or 5 that had upgrades. The biggest one on the plus side was NextDC. So they announced another $100 million data centre demand in Melbourne, which pushes them above capacity, so they're going to have to build more. So there's a kick-on effect for all the smaller, the Southern Cross Engineerings and these sorts of stocks on the back of that. So they all caught a pretty big bit. I think NextDC was up about 8 or 9% today. So it wasn't all bad news, but yeah, I mean, you've been calling it the confession season.
Yeah.
The market kind of considers all the May conferences as confession season. You're close enough to the end of the year that you can start to give some guidance on what the full year looks like.
Yeah, and what does it look like?
Well, I think things are getting worse. The other thing we're watching very closely is what we call the soft data, the surveys. So whether that's consumer confidence or whether that's the PMI data. So today we got more PMI data. We got the services PMI data in China, and that again, that was a very weak number. So I think that came in just above 50, and the market was looking for sort of 51.5 to 52. So the services side of the economy is supposed to be holding up well, but the manufacturing has all been coming down. So we're seeing the soft data is very weak. So this is the countries that have reported services PMI, and anything to the left there is slowing. It's either strong and slowing like the US and China, where it's still above 50, or it's weak and slowing like in Europe. So either way, there's no country where the services side of the economy is getting better. It's getting worse. It's just a matter of from what level it's getting worse. So similar picture with manufacturing. So there's manufacturing. You can see there's a couple of countries that still look okay, but most countries are drifting down into that lower left-hand corner, which is below 50, so contracting, but also contracting at a faster rate. So we're starting to see more countries slip into that. So for us, that all points to lower earnings. I just don't see why the market. The S&P's had its biggest 9-day rally in history. It's up over 10% in 9 days. Never happened before, and yet we've got all this sort of negativity coming through on the earnings front. For us, there's a disconnect there.
Yeah.
The buy the dip, narrative is I think a bit of a sucker's rally.
Suckers rally, I love it. All right, so if the US is, as some people say, just weeks away from a huge shock, what does that mean for the Fed that is meeting this week?
Yeah, the Fed's in a really tricky place, Julia. I think we spoke about this last week as well. If the tariffs are going to be passed on to customers, and there was a survey that I saw that said 75% of businesses were looking to pass on at least some of the tariffs to their customers, looking to absorb some of it in their margins, but mostly looking to pass this on. If that happens, the Fed's really hamstring, because the labour market's holding up fine. The payrolls were fine. We've had a little bit of a tick up in claims, but not dramatically. And so the labour market's fine. They don't need to do anything there. And yet, hang on, we've got inflationary pressures. Should we really be cutting rates? I mean, the market's predicting that they will, not necessarily tomorrow, but maybe the next meeting or the one after that. But they're really got one hand tied behind their back. And obviously, you've got Donald Trump railing against Jerome Powell, wanting him to cut rates. So I think they're in a really tricky place. And look, less so Michelle Bullock, Governor Bullock. I think she's got room to move because the data's kind of favourable for her. And we won't have an inflationary impact from the world trade situation. If anything, it'll be deflationary. So this is what we've got priced in. The blue is what we think is going to happen. And the red is what the market's pricing as of today. So we're going to end up around about 3, maybe a little bit below 3 in a year or so's time. The path to get there is a little bit uncertain. So we've got one in May, one in July, one in August, and one in November. That's what we think is going to happen. The market's agreeing with us on May to some extent. But probably a little bit of doubt around the July one. There might be a pause But nevertheless, for anyone with a mortgage, that's good news, right?
Yeah, absolutely. Well, that second cut, as you say, is the one with the question mark over it, and certainly not factored into all economists' outlook, but that May and August seem to be.
Yeah.
What did you read into the dwelling approval data today?
Horrible numbers. Yeah, down 8.8%. As you said, we need to build like 1 million homes. It's like we've got this massive housing shortage. What the heck's going on?
Yeah.
Look, it's a monthly number and they do jump around a bit, so there's some seasonality there, but that comes on the back of auto sales, which were down 9%. So it's like, and the household spending number today that was negative for March as well. So what's going on? I thought Australia was, you listen to the banks, you listen to Rob Scott at Wesfarmers, one of the biggest retailers in the country. Things are okay, but yet you see this data and it just looks really messy. So there's obviously some volatility, month-to-month volatility in the numbers, so we need to look through that. But it's not a pretty picture. We want to be building 250,000 a year. At the moment, we're struggling to get anywhere near 200,000. So yeah, it's not a story. Look, I think it's still really hard to deal with the cost inflation and the labour shortage. I think it's still hard to get tradespeople, and I think it's still hard to get goods and materials at a reasonable price. I think there's been so much cost inflation in the system that it just really is difficult for builders to make a buck. They're still going broke. I mean, there was one, the Roberts Group down in Melbourne, that went broke a couple of weeks ago. So it's still really tough to build houses and make money. So until that changes, so the solution to that is higher house prices.
Oh gosh.
Which nobody wants,
no,
right?
Indeed.
Except those people who own a house.
So what is the main focus then for Anthony Albanese with his now majority government, which a week ago we were not certain who was going to win, let alone that there would be a majority.
Yeah.
Is it that? Is it dealing with the housing shortage? Is it dealing with productivity? Is it both?
Yeah, look, Jim Chalmers has said they want to tackle the productivity issue because that's a problem, right? Without labour productivity, you get any sort of spike in inflation and it's going to flow through to wages. You can't absorb it in productivity. So they need to do something about that. I think the NDIS has probably helped contribute to the negative productivity because it's added a lot of people to the labour force without really adding to national output in the way it's measured. So I think that's an issue. I think the hot button election topics were clearly housing. It's just unaffordable for a lot of young Australians, and unfortunately most of the policies are demand side. They're going to create more demand or make it easier to buy, and the solutions are probably supply side. I don't think either side of politics came up with a really good policy on, okay, this is how we're going to build these houses. They've come out with targets, like we want to build 1 million houses, but how are you going to do it? And the numbers today suggest it is still pretty hard. So I think that's got to be something that they've got to tackle. That and obviously the energy crisis, that's a longer term issue they need to deal with as well.
I know you're not a political analyst, so feel free to bypass this question if you like, but what happened to Peter Dutton? Was it the Trump effect? Was it not listening to the electorate?
Yeah, look, I'm from a family of politicians, so I'm going to have an opinion. There's a couple of things. Yes, the Trump alignment didn't help. It obviously destroyed the guy in Canada, so that wasn't helpful. I think changing their policy stance mid-campaign, particularly the work from home, obviously some of their policies just did not resonate, such as the nuclear program, and they could argue about how much it's going to cost, but pretty much Australians don't want nuclear. That was kind of clear. His inability to land a blow against Albanese in any of the debates, he didn't really land a blow at all. And normally, those things are set up so that you do have a reasonable chance to. So I think head to head, Albanese versus Dutton, Albanese won every contest, so that didn't help. And then obviously the Teals are still a major issue. Everyone thought the Teals were a one election phenomenon. They're clearly not. So the independents, the Teals, continue to erode the base of the Liberal Party. So particularly in states like New South Wales and Victoria. So I think sort of hollowing out from the Teals, inability to land a blow on Albanese, backtracking on things like back to work and so forth, and then also the alignment, if anything, with Trump. That's 4 nails in the coffin, right? You don't get out with 4 nails in the coffin. You
don't indeed. All right, Martin, thank you so much as always. Martin Crabb from Shaw and Partners. All right, getting back to stock specific, the stock of the day was WiseTech. Now, WiseTech flagged that potential demand risks from trade tariffs could pose headwinds for the company this year. It does expect container volumes to be down around 1%. Sean Hickman from Market Matters, Rudy Philippek van Dijk from FN Arena joined Nadine on the call.
two things work in WiseTech's favor. One is, of course, the share price has already come down quite a lot. And the other thing is that, which I am still convinced as well, if you take a longer term view, this remains one of the prime growth stories on the ASX. So it becomes a case of what's your horizon, how long are you willing to stay on board, and how confident are you in a company's forecasts and outlook.
It's a quality, wonderful company. But the problem is, obviously we know there's been a lot of changes with the CEO, a 70-year-old, very, very intelligent man. Rudy and I were talking about him beforehand. I've never met the man, so I can say he's very, very smart. A few personal issues have crept on board. And all I'm saying, that makes me wonder, okay, looking forward, would you pay the same valuation for this great company as you might have done 2 years ago? And my gut feel says probably not. So hence I can see some of the weakness coming in that we're getting.
All right, let's have a look at the market leaders this Tuesday, kicking it off with Tabcorp on its update, and NextDC, of course, Martin talking about its market update as well, which sent shares tracking higher. Ramelius, Helia Group, West African Resources also looking solid. To the downside, HMC Capital dropping after cutting its earnings forecast. Sigma Health also gave an update at so-called Macquarie confession season, talking about the implication as well of the Chemist Warehouse merger. Polynovo, Endeavour Group and A2 Milk under pressure too. In the small end of town, Canyon Resources had a good session, up by some 30%, but heading the other way today was the likes of Anteris Technologies, which was down 11%, and the Brisbane Broncos off by 10.25%. US trade balance is due out for March tonight in the US. EU PPI also expected lower. We've got earnings as well from the likes of Advanced Micro Devices, Supermicro Computer and Constellation Brands. Looking ahead tomorrow, we've got the Kiwi unemployment rate expected to tick up to 5.3%. Also the living cost indexes for the March quarter, which measure how inflation affects different types of households, such as employees, retirees, benefits recipients. Let's finally look at where the local market is, and it hasn't moved much at all, down 0.1%, so very much seesawing amid this slew of outlook updates coming through from Macquarie. Also a sell-off in the major banks after Westpac's interim result missed expectations yesterday and sparked a sell-off somewhat in those shares. And just noting back to NextDC, which was one of the best performers today, UBS saying that a win of a record 52 megawatts worth of new contracts has almost entirely secured NextDC's growth profile. So obviously, investors liking that story today. We'll be back from 9:45 again Eastern tomorrow. Join us then.